It's Thursday the 5th, I'm FX Blue and this is CurrencyTransfer.com's market update. So the trading ranges really lack a bit of direction at the moment. Cable's trading range is narrowed. Why is that important? Well, often when you've got traders having opposing views on what's driving the market, it creates this narrow range which inflates the pressure, and when there is a breakout, it's often more rapid and more violent than normal market conditions. Cable is currently stuck between 140.20 and 140.80. We've got Brexit fears on one hand limiting the upside, and we've got the rate hike hopes providing comfortable support on the downside. Both ends of this trading range have been tested, but with no real success of the breakout on either side. So what drivers are in play? Well, tomorrow we've got the non-farm payrolls. That may provide a bit of US dollar impetus, which may affect the trading range, but we may also have to wait a little longer for anything to be sterling led. Inflation data coming out in the UK in a couple of weeks' time may be the next form of any sterling impetus. This will provide a little clarity on the will they, won't they raise the rates in May, and may drive cable accordingly. Over in the Eurozone, unlikely to change monetary policy anytime soon. Inflation data came out there to the bottom end of expectations. Year on year remained at 1.4%, and month on month slipped slightly from 1.1 down to 1%. So the year on year at 1.4 is still comfortably below the 2% target, so Draghi is unlikely to make any changes in the short term. Sterling euro continues to approach the high of the year of 114.75 as the euro exhibits the weakness. Over in the US, obviously the US dollar has been dominated by the trade wars. A brief synopsis of the story so far. Trump kicked things off with 25% tariffs on US steel imports from China, and then granted a number of exemptions for a few favoured countries. Spoiler alert, China wasn't one of them. And then China obviously retaliated, imposing similar tariffs on a number of items imported from the US. Side plot, this has also helped boost other currencies like the Aussie dollar, which by logic is expected to increase imports to China, certainly from the wine sector, because China has imposed tariffs on US wine. So finally the Aussies have got reason to raise a glass to Trump. The dollar index has been relatively unaffected by all this, remaining largely above the 90 figure. And this is because of the euro. The euro is a major component of the dollar index, and euro dollar has been trading close to the support at 122.60. So unless euro dollar breaks that support, chances are the dollar index is going to remain close to the top of that current range. Anyway, top dead center for tomorrow, it is the non-farm payrolls, reporting the number of new jobs created in the US in a monthly basis outside of the agriculture sector. The ADP report came out yesterday, typically a precursor to the non-farms number. Forecast for that was 208. It came in at 241. Place your bets in the comments below for Non-Farm Friday.